So just to put things into context, it seems there's no end in sight for the higher prices. U.S. consumer price inflation surged higher again in October. Over the past 12 months, prices climbed 6.2%. It's the biggest increase since November of 1990. So like I said at the start, this could be a very expensive Thanksgiving season. What's your take on the inflationary situation right now, Doug?
It's going to get much worse. Now, I've been predicting this, as have a number of other people that understand economics for some time. It's not transitory. All of these central banks, it's not just the Fed, but all of them are printing up currency units by the trillions. And as they go into society, they bid for things. Mostly they've been bidding for financial assets, stocks and bonds and real estate. But there's plenty left over to bid for the things that you eat and drive and so forth. It's going to get much worse. Don't forget, I believe that we've entered upon something that I call the Greater Depression. It's going to be like what happened from 1929 to 1946, but much worse and much different and much longer lasting. But I have some good news for you. This Thanksgiving may be expensive, but you're not going to be grubbing for roots and berries quite yet anyway.
All right. Well, yeah, not quite yet. But what's interesting is that we probably haven't spoken this much about inflation and how frightening it is since the 1970s. So were there lessons from that period that we should be applying today?
Yeah. Look, dollars are a hot potato, and that's a real problem because the whole world runs on dollars. Americans save dollars. That's how you get ahead, by saving dollars. But the value of the dollar is being actively destroyed. Inflation is not something, just to make sure we're all on the same page out there, it's not the fault of the butcher, the baker, or the gasoline maker. It's the fault of central banks and governments. They control the number of dollars. So we're in for big trouble because all these governments are bankrupt. Taxes are high and going higher, but they're spending so much that the only way they can get more money is by printing it.
Right, right.
That's what's happening. It's going to accelerate. There's no way out from these people's point of view. If they stop printing money at this point in a debt-heavy world that we're in today, debts can barely be paid with these artificially low interest rates, close to zero. So if they stop printing money, the whole financial structure could collapse. That's what happened in 1929, more or less. We had a deflationary depression where lots of dollars were wiped out and prices went down. They don't want that to happen this time. So they're going to keep printing up money. They think it stimulates the economy. They really think that. They really believe it.
Let me ask you this, Doug. When you say things are going to get much worse, we hear a lot of terminology being thrown around when we talk about inflation, stagflation, hyperinflation, superinflation. What phase are we really in, according to Doug Casey, and what phase are we headed to?
Well, it's getting very late in the game. It's funny, when the economy nearly collapsed 10 years ago, I said, how can they keep the ball rolling? How can they kick the can further down the road? Well, I didn't anticipate that they would create as much money as they have to, in effect, throw oil on troubled waters. I didn't anticipate that they'd actually take interest rates down to zero, and in some cases below. But they've shot those arrows from their quiver. So what can they do next? That's what I'm asking myself. They're thinking about guaranteed annual income. They're already implementing what's known as modern monetary theory, which basically prints up money with no limits. They might try wage and price controls, as stupid and counterproductive as that is, because these people learn nothing. But what I'm expecting over the next 6 months or a year is increasing chaos in the economy. Why do I say that? Because in Washington, the people that are running Washington now are actually Bolsheviks. They're actually Jacobins. Now, they're not the same people. They're acting like these people. And at this point, we're actually on our way to a police state in the US and a lot of other countries around the world today. You combine this with the COVID hysteria, and you tack onto that the global climate hysteria. This is big trouble. These people are directing trillions of dollars towards what should be viewed as a relatively trivial annual flu, and trillions more dollars towards shutting down the carbon economy, which is actually insane. And it just compounds all the other mistakes that they've made. So big trouble this way comes.
Okay. Let's unpack that. A lot of good stuff there. A lot of questions I have now. If the taper will be delayed, then Doug, right? If they just have to keep printing because they have no choice, then do you not foresee a correction happening in the S&P anytime soon?
Well, nobody knows how high a tree can grow. And frankly, I'm surprised that the market's gone as high as it has. I haven't participated in it because I've been doing my own thing. And it's been very fine, thank you very much. But look, the stock market is at an all-time high. It's in a bubble. The bond market is in a hyper bubble, and it's much bigger than the stock market. So I don't want any part of either one of them. What I'm doing right now, I have been doing, is buying resources, mining shares, oil and gas shares. That's where I am.
Yes, and that's what you've done for a long time. To that point, gold prices, Doug. We've heard it for the longest time. Gold is the ultimate hedge in inflationary times. And the number one question I get is, well, then how come gold, apart from the nice few pops we have here and there, isn't headed much higher? Is it because the S&P keeps roaring higher? Is that the greatest threat and competition to gold right now? Is it the S&P?
Let's look at this from a historical point of view. Back in 1971, gold was at $35 an ounce. Now it's at $18.50. So it's had a hell of a good run over the last, dare I say it, 50 years. At this point, it's not like gold is a super bargain, which it has been at times in the past. It's reasonably priced relative to other commodities, relative to the world at large. I think it's going higher because it's the only financial asset that's not simultaneously somebody else's liability, which is very important in a time of financial chaos, which we are entering. I'm mainly speculating in gold mining shares, which in some ways are at all-time lows. Certainly relative to the stock market, they are. Certainly relative to the amount of earning they are. So that's where I am as far as gold is concerned. The shares, not the metal.
Okay, you prefer to be in the mining shares, not the physical metal.
They're speculation. They're not an investment, but I see a lot of upside in these gold shares.